Right then. Hello, good morning, good afternoon, everybody, depending upon where you are in the world. Um, this is a tax and economic crime offences updater for 2026. It's aimed at legal professionals. My name is Joseph Nahal McDonald, Joe Nahal McDonald. I'm an asset recovery and MLA specialist. I spent most of my career working in and around complex economic crime, both for the defence and the prosecution and in academia. There's a slide at the end of the PowerPoint which has a bit of a potted CV for those who are interested, but I'm not going to dwell on that too much at this point. It'd be a little bit boring. For now, let's just turn to what we're covering today. So, going on to the next substantive slide, which is context and aims and objectives. Today's session is designed for any interested lawyers, paralegals, and other legal professionals who want an up-to-date understanding of the evolving legal landscape around tax and economic crime in the UK. We're going to take something of a whistle-stop tour through the key developments of those themes in the last few years, but in particular, we're going to look at the recent legislative developments and statutory changes. We're going to look at the context of avoidance when compared to evasion, in respect of advising on tax minimisation approaches. We're going to explore His Majesty's Revenue and Customs' current enforcement approach, including how it distinguishes avoidance, evasion and fraud, and what we can learn from cases like the Crown against Eccleston. We're going to look at the evolution of the dishonesty test in recent case law and why that matters for these offences. As you'll see, there's been somewhat of a hybrid approach. There was a different approach taken in crime as in civil over many decades, and we're now at a point where the two jurisdictions are on all fours, and indeed there's a nuance there that we need to discuss. We're going to examine the reformed approach to corporate attribution through the senior manager test within section 196 of the new Economic Crime and Corporate Transparency Act 2023, and may call that ECTA for short, which is what practitioners tend to call it. We're going to look at the expanded and new failure to prevent offences under section 199 of that act. We're going to examine what reasonable fraud prevention procedures and proportionality of procedures look like in practice, or at least what the guidance says that it should look like. As I say, it's not particularly been tested, but we'll come to that. And then finally, we're going to have a brief discussion as to the future outlook and likely areas for reform as we move through this year, 2026 and beyond. And as I say, that will look at some of the wider thematic issues that practitioners in areas of investigations and economic crime and anything to do with this in terms of regulated sectors may find potentially interesting growth areas for the year ahead. As we're doing so, I'm going to aim to keep focus on practical implications for compliance and legal practice. So by the end of the session, you should hopefully have a clearer sense of how corporate and individual liability are or have evolved, how enforcement authorities are approaching those matters, and what constitutes best practice for prevention. As I say, quite a lot has happened in this space over the last couple of years, so this is necessarily going to be quite a broad brush or high level run through. The idea is to give you a framework, and then you can explore the themes in more detail afterwards, depending upon your own practice and your client's needs. And as I say, as always, please feel free to contact me if you need a steer, if there's anything that you'd like to discuss arising from these themes.